The number one asset that I've been telling people to watch is yields, bonds, interest rates, the most important thing. And you know what? I haven't covered them in the last couple of videos, the last two, three, four trading days, not much anyway, because they're just hovering at their highs, no crazy move. And and it's just the same story. Yields are just way too high, whether they come down a tiny bit or even if they make slightly new highs, it doesn't change anything. It's just they're way too high and the damage they're causing is profound. And we see that in the other assets that I cover. So I'm going to cover commodities here, but I'll actually cover the DXY rather than yield. Well, I usually cover both, but the dollar today, totally unchanged. It went higher, it went lower, it closed basically where it started. Yesterday, also similar sort of stuff. So it's just sort of retesting this descending breakout. It could go either way. I actually feel like it may. I mean, I did say it was going to come down to 104.5, but look, this huge reversal. I changed my mind. I changed my mind. This huge reversal suggests, no, we want to go higher, and it did. And now that it's broken out this descending, if I had to choose, and the DXY has not been too relevant actually to commodities for once. If I had to choose, it's going to go sideways and probably go higher. But it's funny because, with the war breaking out, dollar wasn't a safety trade. So I'm not actually sure what the DXY is going to do. I know if it breaks out, if it starts to close above this 107 point whatever, this recent high over here, then we'll go to 108, retrace and maybe a bit high, but it's lacking the strength it used to have. Here it's definitely trying, but it's just even with the war, it's just not really succeeding. So, I can also see it go here and then just fail to test this area, this absolute high or close above it and just roll over. And once it gets down here, then it will really flush. If it starts to test this area again, 105.5, after failing this breakout, then I think we'll really flush to 104.5 and maybe even lower, because that pattern will look more like well, I don't know, a deformed head and shoulders, but it's just going to look like it wants to go a bit lower than just this one unit, let's say. So on index, it's looking like it wants to test the highs, but there's some doubt in me that it's got the strength. But regardless of that, hasn't had too much impact on commodities for days. And by the way, on this yields real quickly, and it is important just to recap. Yields are just drifting a bit lower, nothing crazy, still higher highs, higher lows. Just hasn't really had a crazy impact. We made new highs, that's destroyed the markets, and that's damage done. And now we're just sort of drifting sideways at the highs. So if I look at TLT, the bond, look at that. That's just the bond, it's just hovering down here. We could have a small bounce, but nothing crazy, no massive bounce, in my opinion. I mean, yes, people could pile into bonds if there's something really scary going on, but it's not happening at the moment. So that's to say the dollar and yields are actually not too relevant. And if the dollar does fall, I think that will be relevant. If the dollar falls, I feel like commodities will get an extra boost. But if the dollar keeps going up, it's not the same thing anymore. It's not the same sort of you know sort of negative influence on commodity prices. And I say that to say this: copper, we've had markets going down and the dollar basically staying strong. Let's say yields also. Copper's just finding a nice support and rising despite that. So for me, copper goes higher. Copper's going to break out of this range and probably start heading in the mid 80s, so 3.84 or something. Because, okay, if the dollar starts to test its highs and go a bit higher, you could have a little bit of a sideways move down. But this is strong support, given how strong the dollar's been, given how strong yields have been, and given how weak the markets have been. So all those three elements that are supposed to push copper down, and copper's held this range, that suggests it's very, very likely to rise from here a little bit, nothing too crazy. But I'm very convinced that copper will now actually make a bit of a move higher, kind of regardless of what happens. So that's my take on copper. Natural gas, that was beautiful. Now, not the best daily candle there, bit of rejection, but it's done a good job here this week, reversed straight away from Monday, Tuesday, Wednesday, Thursday, and then Friday made new highs. Close it of day, just suggests it's not ready to do this. We're going to have a bit of a curl. This will be like a cup and handle. I think we're going to try and create a bit of a handle. I don't see us just going all the way down here and then closing below this, ascending and below that. That's what would trigger a big move lower. I just don't see us going all the way back down to 3.15-ish. I think we'll just curl and actually go higher towards 4.5, do some gap fills. So natural gas for me is good. It's a horrible daily candle. It's as bad as it gets. But sometimes you got to think about the long term, the fundamentals, and I just feel like it's kind of destined to go towards the fours. Oil bounced nicely, just trying to find a bit of a footing here, trying to just grind sideways a little bit before it can test. That's my take. I think I'm a bit surprised how weak it was, especially on Monday. That took me off guard. Then Tuesday, okay, kind of makes sense. It wants to go a bit lower because that Monday candle was it's hard to really rally after that. So there you go, just trying to relax, stabilize, and maybe start to test 91 again. If we start to take that out, then we can test 94, 95, but it makes sense that we're just grinding sideways. But, with today's news, gold, you saw what gold did, rising. Oil also rose, but not with the same sort of tenacity. But still, it was a green day. 2% is nice. It just needs a bit more time before it can rally. So let's see what happens. And if it fails that rally, then down we go to 79, in my opinion. So, okay, oil is doing okay. Uranium, like I said, right? It's only the markets that will take uranium down. And geopolitics and markets dropping kind of makes sense for uranium to just not rally yet. So that's I'm quite happy to see that, to be honest. Let's see if more market drops can take it down. And in my case, hopefully flush. But, it'd probably take a massive market drop for a move down to here. But today was pretty good for people like me who want to buy uranium, down 2%. If the market were to rally, it would be straight back up where it started, to be honest, and probably would resume its push higher. But uranium, weak because of the markets, not because of the dollar or anything else. In my opinion, gold, obviously gold has been strong for ages. That tiny retracement to 1950, that just lasted a couple of seconds. Back up we go. And obviously today with the ground invasion, hitting the wires just before the close, we squeezed right through 2000. 2000 was never resistance. I've always said that. Look at this, just up, 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 up. Where's 2000 there? Nothing. And here we are just below 2010. It's always those little odd numbers. 2009 is a resistance, and then we stop there. So what happens on Monday depends what happens during the weekend, right? Depends how crazy the guerrilla fighting is going to be. Urban guerrilla warfare, basically, with a few rural tunnel ambushes probably. Anyway, we'll see how it goes, and let's see if hopefully no regional players come in. Iran, Hezbollah could get more crazy. Syria, Jordan, Turkey, or whatever, all of them. Let's see what happens. But if it does get worse, then we go straight to 2020, straight away on Monday or Sunday night. And then let's see, we could start hitting really strong highs. I prefer to see gold go up for monetary or fiscal reasons rather than war. Obviously, no one likes war, but it is what it is. Just watch the levels. I think it would have kept going to 2020 had, the market's not stopped. It's obviously Friday night here. So very strong. Silver, you know what? Silver, I didn't even see it. So I'll be seeing this for the first time. Yeah, nowhere near. It should be all the way up here. It should be all the way up here, way past 24. So underperforming. At least it had a good day, up 1.3% or something. Definitely underperforming. This is really a war trade. Normally silver's outperforming gold, and yeah, no, it's still a war trade. The whole thing's been a war move. But at least it's up. Let's see, maybe 2020 on Monday will fall silver to 23.6-ish up here. Maybe people weren't fast enough to buy silver today. I don't know, but it should be much higher. Definitely underperforming. But at least it's up and closing a high of day like gold. Let's look at the mine. Yeah, let's look at the miners. I'm not looking at levels on the way down just yet. I still think we go a bit higher. The miners did okay, actually. Normally they would also underperform like silver versus gold, but they did quite well. Starting off, slightly red also on the day. So it's nice to see this strong candle close a high of day. Very nice. GDXJ here, I think it needs to Really close above 36. That would really do it. So close above the descending. We haven't had that yet since this big move from 1810 in gold. That would be the first, objective. Close above 35 on Monday, which would also mean above this descending. But then to really clear like the last high from this pop, and also the last high in this area and a big round number, a 36 close, then we go up. We go straight past 37. I mean, a little touch and hover around, but boom, straight to 39. Let's test this 40. So we need 36 close. It's a big ask. It'll be a big move, but it needs to happen. These miners are totally underperforming and they have a lot of catching up to do. 5%. One of those days, like 5%, 8%. One of those, Jesus Christ, wake up, you idiots. You are mining an underlying commodity which is just so high, and your profit margins, all in sustaining costs, all that stuff needs to really just get realistic about it. GDX, I feel like that's done better than GDXJ. Look, already it's closing above the descending. There, it just needs 3% for it to close above 30. That all important 30. Look at that huge level of resistance. 3%. We can do that on Monday if gold starts to rally more. So, but look at this nice close, a high of day. It's been trading the whole time above the descending, so a lot more bullish than GDXJ, which is, not always normal. Normally, GDXJ should outperform GDX. Silver should outperform gold, but it's a war, it's a special move, and actually gold's outperforming, and GDX is outperforming GDXJ. So it's like a defensive bullish move. But that's what I want. I want to see GDX close above 30. Obviously, we had Newmont, which had a nice I think it failed in earnings, but the reaction is all we care about, and the reaction was up, and that was good. Let me just see that very quickly. My number one holding, I was really angry with it, but then look, next day did okay, outperformed, some continuation. I think that also, if we can close above 41, that will help the whole sector. But yeah, it was a good day for the miners, let's be honest. It's just we need more. We need more continuation. And next week should be the week for that. I think markets will keep going down. The dollar, I don't think it even matters, but imagine the dollar starts to roll over. Gold, silver could start hitting new highs, and maybe that's what we need. Maybe we just need new highs, and then people start to roll in, and $2,000 becomes a floor rather than a general resistance level in gold. And then people just start to look at these seriously and say, oh my God, we need to buy the miners, and then the index rises. So anyway, it's a long video given my new format, but I hope that that was a good summary of the commodities and the miners.